Hello everyone, this week's focus is the Magnificent 7 index, which is back at a decisive zone. With geopolitical tensions cooling a little bit from March's peak panic, we're seeing a rotation back into growth, especially AI-led trades. And once again, that puts the spotlight firmly on the Magnificent 7. Let's check the technicals. What we're seeing right now is not just a recovery, it's an aggressive repricing, and fundamentals are backing the move. Mag7 earnings expected to grow around 25% in 2026 versus 11% almost for the S&P 493. So outperformance likely extending into 2027. AI demand continues to surprise to the upside, and investors rotating out of defensives and back into tech momentum. So fundamentally, the story is intact. Then on the chart, we can see the rebound from April lows has been almost vertical. Price has fully exited the bearish channel, and that's a strong bullish signal. Now testing a major resistance zone around 1820 to 1850. This level previously acted as a disruption ceiling multiple times. And at the same time, we can see RSI pushing into overbought territory above 70%. And that means momentum is strong, but also stretched. So what raises a flag here? We can see 11 out of the last 12 sessions closed green. Statistically, that kind of move often leads to short-term exhaustion. The rally has been faster than the drop. So it's a classic sign of positioning plus FOMO, not just fundamentals. We're heading into earnings season, so expectations are high, which increases the risk of buy rumor, sell the fact move. So the key scenarios we have moving forward: a breakout continuation. We need a clean break above resistance that would extend momentum, or we would see a rejection and a pullback, which is more likely on the short term. That would need a failure at resistance and high RSI, which we already have, which leads to a healthy correction or consolidation. So the bottom line, the trend is bullish. We have strong recovery, fundamentals aligned. On the short term, we have an overextended signal.